Hi, this is Sive Morten with the daily update on EuroFX. I post my exclusive market overviews with the key political and economical events, charts and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video.
Welcome back everybody, let's take a look again on euro currency. So from the technical point of view on the euro currency, it's a very interesting situation. You will see it when I will show you intraday charts. In general, currently, mostly the price action confirms our suggestion that probably market should not stay around the OP for too long. Currently, on a daily chart, it is becoming evident some kind of the flag pattern is forming, which is potentially bearish. And usually when the market suggests some reversal, even to show the moderate pullback, it behaves slightly different. This is first moment. Second, market started flirting with, as you can see, MACD predictor, and that's actually could give us by today's close price, today end of session, bearish grabber. That suggests taking out of these lows and probable downward continuation. Why the downside continuation is very probable? Because currently we stand around release of the CPI and big inflation, and market across the board rising bets on these numbers. It is anticipated that inflation should start rising. It should be higher. Actually, this is also our view, but we are not sure yet that, well, right in the September we get the real jump in inflation. We hope that probably will happen, but we suggest that with the most evident it should happen on the next month. But even right now, if you take a look at the consideration, the prices on the gasoline, diesel, fuel, in general, energy, and so it could really jump even this month. And investors are raising the bets, and hedge funds decreasing their bearish positions against the United States dollar. So other signs appears that investors in general anticipating high inflation. Some statement from the big banks and Morgan Stanley, JP Morgan have released some research where they also suggest that inflation might be higher. And all this take reflection in the price and in the euro currency as well. So in general, as you can see, potentially really bearish situation. So on lower time frame, another bearish sign that stands in favor of downside action is actually the gap that we have right in the opening of the Friday session. So despite that Friday session was relatively bearish, market was able yesterday to move upward action, to show this upward action, reach the resistance area 107.60, and now is dropping. So you can see here we're getting the pattern on the larger scale. And with all the stuff that we have on the background and with this gap, chances that it will work and we will get the kind of the ABCD pattern to the upside stands less than usual. And it seems that we're coming to the really important moment where the riddle should be resolved. So let's take a look what we have on the hourly chart. Market has formed bullish reversal swing to the upside, forming right now the right arm. So it seems that we have to keep an eye on 107.70. But the problem stands, it's twofold. First of all, we have the cap right there. Second, we potentially could get the bearish grabber, which is overcome any intraday pattern. So daily chart is has more domination role than the lower time frames. And then you understand, in the current circumstances, especially in anticipation of the high inflation, chances on these hand shoulders looks really, well, let's call it as less than usual. Well, that's why, whether you would like to take the long position with this head and shoulders or not, this is up to you. Because if inflation really will be soft, you will get a great result. So hand shoulders probably will work and market could skyrocket somewhere to the area of 108. So it might be some kind of the ABCD pattern to the upside. Besides, risk relatively small. So for example, well, you could wait for the position taken until market will close the gap. So it might be lower. And then consider, well, it makes sense to take the long position or not, placing stop below these lows and see what will happen. Well, risk will be very small. So it's, well, approximately 15-20 pips maybe. But potential reward is that if the CPI will be low, well, this really will be significant. But the our major scenario still suggests that probably bearish signs look a bit more reliable. And personally, I do not want to take the long position based on this hand shoulders pattern, although it's not forbidden. And prefer to see the clear signs of this failure just to consider possibly taking the short position. So most conservative approach will be to wait when the grabber will be formed and confirmed on the daily chart, and when market will keep going lower, closing the gap, and you will be sure that market stands with this gap area. So it will not show sharp reversal. So if we will see that market will drop and then show sharp reversal to the upside, in this case it would be better to wait a bit more. If we will see the closing of the gap and market will remain in this area, start floating around it, challenging the lows maybe, that will be the clear sign that it's preparing to go lower. That's approximately what we have on the euro currency. As you can see, technical situation looks really interesting. So let's keep watching and see how it will go.